there, this is Lisa Morales. I'm here with Paul Vincent with Cornerstone Home Lending, and we're going to answer 3 questions that a lot of first-time home buyers have. Number 1, Paul,
Yes.
can you tell me the difference between pre-qualified and pre-approved?
Absolutely. So pre-qualification is where the consumer is going to fill out a credit app and the lender is going to pull the credit report and issue what we call a pre-qualified letter. But income and assets have not been verified. So a pre-approval is where the borrower will actually submit their income docs, their asset docs. Underwriting will verify those income docs, and then the updated letter will go out showing that income and assets have been verified.
Perfect. Now, how about credit score? Tell me how important credit score is.
So credit score is very important in the mortgage industry. So to do a conventional mortgage, it requires at least a 620 credit score. And if we're going to do a government loan, such as an FHA, which is the most utilized first-time homebuyer loan, it requires a median credit score of 580. Now, in the conventional world, first-time home buyer is a 3% down payment, whereas an FHA is going to be a 3.5% down payment.
That's good.
Yes, it's excellent. The other reason we might use an FHA loan for a first-time home buyer is the debt-to-income ratio is allowed to be higher on an FHA than it would be on a conventional loan.
Okay, can I follow up with that? Can you explain debt to ratio?
Absolutely. So debt to income ratio is where we're going to take the borrower's minimum credit payments that are reporting by the repositories on the credit report, plus their proposed new housing payment, and divide it into their gross income, not their net. And that will give us a debt to income ratio. On an FHA loan, 3.5% down, we can be allowed to go typically as high as 56% versus a conventional loan where we will be allowed to go anywhere between 45 and 50%. And when I say we are allowed, when I say we, the mortgage lenders use automated underwriting systems, and so those are typically the maxes that are allowed.
So speaking of credit scores, I understand there are 2 different types of credit score engines. Can
Yes.
you elaborate on that a little bit?
Absolutely. So there are 2 types of credit scoring engines. There's Vantage and there is FICO. So any service that typically is for free or minimal cost, like Credit Karma or any of your credit card companies, they will offer what's called Vantage scoring. And the big difference is they only use 2 of the 3 repositories, whereas in the mortgage industry, we are required to use the FICO scoring engine, which will always use all 3 repositories. So credit scores will be different and also will vary because of the 2 versus 3.
Right, got it. Okay, and now can we talk about some of the programs you have for first-time home buyers?
Absolutely. So both conventional and FHA have down payment assistance programs. Now they do have a minimum credit score requirement of 620 as opposed to FHA allowing to 580. And there are grants that cover 2, 3, 4, and 5% of the loan amount as the down payment and or closing costs. So for example, you have a loan amount of $300,000 utilizing a 5% grant, that would be a $15,000 grant. Of that 5%, $15,000 grant, 3.5 of it would cover the down payment and the remaining would cover closing costs, prepaids, and escrows. Obviously that wouldn't cover everything, but the buyer and the agent could negotiate seller concessions and the seller could pick up other costs.
That's so good.
Absolutely.
Love it. Thank you so much. That was great information.
You're very welcome.
Tell us a little bit about yourself and what first-time home buyers can do to prepare to buy a home.
Okay. So I've been a mortgage banker for 29 years. So I've seen every possible scenario out there. And to get started, the borrower would fill out an application. You can reach me on my cell at 281-827-1139 or by email at pvincent@houseloan.com.
Thank you.
You're welcome.
That was great.